What's up, y'all? Jordan here with Victorium Trades. Today I'm going over a couple positions I am in. So let's start off with Cara Therapeutics. What did I see? What am I looking for? So pretty much Cara, previous spiker in history. Something's up with the stock. A lot of these biotech therapeutic stocks pretty much just run up and dwindle down and eventually go to zero. But Cara is a little bit different. It has a trading history. It has a trading range. It has a lot of levels, a lot of places where people are trapped. So when I see Cara building a right side, building a nice base over roughly a year or so, it kind of piques my interest. And I saw a little volatility contraction pattern, aka the price tightens up around on this right side. I anticipated the stock moving up higher here around to the 28 level, but it has not moved there yet thus far. But we are still holding around the support area at my stop at roughly 21.15. So there is Cara. Next we have Chef. Same kind of deal, trading history. This is a Chef's Warehouse owned online ordering service. So it is not therapeutics, but it has a prior trading history, relatively smooth trading, and it was building the right side of its base. As you can see, it just slowly being accumulated up and up and up with higher highs and lower lows. And so pretty much I entered right here on this 39.35 area and have been holding ever since. So right now I am about break even on the trade. Next we have Microsoft. Microsoft I bought on the close above the 50-day average on 9-17 of 2019 at around 137. The next day it gapped up on positive news. They increased their dividend by 11%, and so right now I'm chilling in Microsoft, giving it a very wide 5% stop below support. It's just wide overall for the name. Next we have CarMax. CarMax has been fiddling with the 50-day moving average around this whole area. I bought on the close above, giving a 5% stop below. And today it had earnings. I had a pretty good feeling about CarMax, doing some just analytical research on used car reports, etc., the current economy, and therefore I held. Today it's gapping up roughly $3.86. And I have an average entry price at $86.76, so in a pretty lucrative spot to either add or hold for a longer term move. We could probably see the 120s in the near future, probably a couple months out, especially if trade war news settles down. We have Costco. Costco I bought while it was breaking out around here at my average price is $286.85. So this $286.85 level I bought and added, and then it gapped up on this China news. They opened a Costco in China and the thing was flooded within the first opening day, and pretty much it hasn't looked back since. It's created new support around this old high area and this gap up area. So my stop is roughly around 284.20. Next we have AKAM. AKAM, just price contraction, decent trading history. Overall the trend is up. You want to go with the trend. So it comes up here, it drops, and then it weeds a bunch of people out by breaking support, breaking resistance, trapping people back and forth, and overall the price action is tightening up, so it has to pick a spot up or down very soon. So I'm in AKAM with a tight stop at 87. Next we have AMED. AMED is a stock that's been fiddling, for roughly years now. It kind of mirrors the market with that 2017 run up and then the basing period, a choppy period that wet people out, but now it is building the right side of a base, finally closed near its 50-day, 20-day, and above its 200-day. So like AKAM, it's tightening up and it's making higher highs, lower lows, and it has to pick a direction soon. Right now the probabilities point up given the past trading history and the increase in earnings per share, sales, overall the stock has a lot of activity pointing to the positive bullish side. We have EDU. Education, not really affected right now by all the China trade war stuff. As you can see, when the market was going down, chopping around, EDU went up slowly. It's building higher highs, lower lows, making old resistance into new support around this 105 level. LGIH, a home builder. Again, same thing as EDU, but even more or even stronger in terms of relative strength. It's filling with this old high where it trapped a bunch of people, wet out below support, overall building a giant cup, and this could potentially be a handle for a larger move. So we could take the measured move from this 37 to the 80 area and predict that we could probably get a $47 move outside of this base. So that'd be targeting the 120s, 130s. Next we have Twitter, my favorite and heaviest stock I am in. So Twitter has a lot of potential. Newer IPO, you can still see back on the daily to 2013. It's been building a giant cup, building another cup. It failed. It gapped down right here in this 2018 area, and has pretty much just been building a right side. You can see it has been spiking up on giant volume accumulation, these skyscrapers, and its earnings are increasing, its sales are increasing, they're getting their ad revenue together. Other than that, Twitter is my number one prospect behind Snapchat. Yeti's another stock I'm in. New IPO, new issue, any new IPO or new issue that's building a base, such as right here in this early 2019 area. As you can see, it built a mini cup and gapped up, built it again. These are just easier, high probability plays where you could put in 10-15% of your account and potentially get 40% back, which has a drastic impact on the risk to reward aspect of that, in terms of when you're putting the money from your account in the stock. Just offers great risk reward. So outside of this, I would pick Twitter and Snapchat as my number one stocks, the potential doublers. Snapchat, looking at it right here, closing above its 50, above its 5, above its 20. It's holding its 5, so that's good character change and really bullish, in fact. And it's pretty much just building this right side. Other than that, stay tuned, hit like, hit subscribe, and stay tuned for more. Fuck.